Hey there, welcome to today's video. If you've ever wondered about investing in the stock market but didn't know where to start, then you're in the right place. Today, we're going to break down the basics of stock market investing for beginners. We'll cover what stocks are, how to get started, and some simple tips to help you invest smartly. By the end, you'll have a good understanding of how the stock market works and how you can begin investing with confidence. Let's get started. First things first, what is the stock market? Simply put, the stock market is a place where people buy and sell shares of companies. These shares represent small ownership pieces of companies. When you buy a share, you own a tiny part of that company. As the company grows and makes profits, the value of your share can increase, and you can make money. Think of the stock market as a giant marketplace where investors come together to trade these ownership stakes, known as stocks. The stock market helps companies raise money to grow, while giving investors a chance to profit if those companies do well. Now, let's talk about how stocks actually work. When you buy a stock, you're buying a piece of the company. For example, if you buy stock in Apple, you're buying a tiny portion of Apple. The value of that stock goes up and down depending on how well the company is doing. Stocks can increase in value for a few reasons. If the company makes more profit, people want to buy shares, and the stock price goes up. However, if the company has a bad year or loses money, the stock price may go down. So owning stocks can be a way to grow your wealth over time, but it also comes with risks. There are two main ways you can make money from stocks. Capital gains. This happens when you sell a stock for more than you paid for it. Dividends. Some companies pay you a portion of their profits if you own their stock. This is called a dividend. All right, now that you understand what stocks are, let's talk about how to buy them. To get started, you need to open a brokerage account. A brokerage is a company that helps you buy and sell stocks. There are a lot of different brokerages to choose from, like Robinhood, eStarTrade, or Fidelity. Once you've chosen a brokerage, you can deposit money into your account and start buying stocks. You can do this through their website or app. Most brokerages allow you to buy and sell stocks with just a few clicks. When buying stocks, it's important to research the companies you're interested in. You can look up their financials, news, and even read analysts' opinions. You want to understand what kind of company you're investing in and how it's doing. Next, let's quickly talk about the different types of stocks you can invest in. There are two main categories of stocks. Common stock. This is the most common type of stock that most people buy. Common stock gives you voting rights at shareholder meetings and a chance to earn dividends. However, common stockholders are last in line to be paid if the company goes bankrupt. Preferred stock. Preferred stock is a bit different. While you usually don't have voting rights, you get paid dividends before common stockholders if the company makes a profit. It's a bit safer, but it can have a lower potential for growth. Additionally, you might hear about different sectors like tech, healthcare, or finance. These sectors group companies by the industry they're in, and understanding these can help you build a balanced portfolio of stocks. Now, let's talk about risk. The stock market is risky because stock prices can go up and down, sometimes very quickly. A company might do well for years, but then something unexpected happens and its stock price drops. That's why it's really important to understand diversification. Diversification means spreading your investments across different stocks, industries, and even countries. This helps reduce the risk of losing all your money if one stock or sector does poorly. For example, if you own stocks in both tech companies and healthcare companies, a downturn in one sector might be balanced out by a rise in the other. A great way to diversify is by investing in index funds or exchange-traded funds, ETFs. These are collections of stocks from different companies, and they're often designed to track the performance of a specific market index, like the S&P 500. By investing in an index fund or ETF, you're automatically diversifying your portfolio, which reduces risk. There are two main strategies for investing in stocks: long-term and short-term investing. Long-term investing. This strategy involves buying stocks with the intention of holding them for many years, even decades. You believe that over time, the stock market will go up, and your stocks will increase in value. This approach is generally less risky because you're not as affected by short-term market fluctuations. Many people use this strategy for retirement by investing in index funds or blue-chip stocks, large, stable companies like Apple or Coca-Cola. Short-term investing. Short-term investing, also called trading, involves buying and selling stocks quickly, sometimes within days or even hours, to take advantage of short-term price changes. While this can be profitable, it's much riskier and requires a lot of research, experience, and time to monitor the market. For beginners, long-term investing is often a safer and more reliable option because it allows your investments to grow over time. Before we wrap up, here are a few tips for beginners. Start small. You don't need a lot of money to start. Many brokerages allow you to buy fractional shares, which means you can invest with as little as a few dollars. Don't panic. Stock prices go up and down, but don't let short-term drops scare you. Focus on the long-term growth of your investments. Keep learning. The stock market can be confusing at first, but the more you learn, the better you'll become at making decisions. There are tons of resources online, books, websites, and even videos like this one to help you learn. Have a plan. Decide in advance how much you want to invest and stick to your plan. Don't invest money you can't afford to lose. So, to recap, the stock market is a place where people buy and sell ownership in companies, and you can make money by either selling stocks for a profit or earning dividends. To get started, you'll need a brokerage account, and it's important to research the stocks you're interested in before buying. Diversification, long-term investing, and staying patient are key strategies for beginners. Remember, investing in the stock market is a journey. Don't get discouraged if things don't happen overnight. Keep learning, stay consistent, and you'll see the rewards over time. Thanks for watching. If you found this video helpful, make sure to like, share, and subscribe. If you have any questions, leave them in the comments below. Happy investing!